Good morning, ladies and gentlemen, and welcome to the show on this Friday, the 3rd of December, 2021. Thank you for tuning in. I'm glad to have you guys here. Now, I've done predictions on here, and I was one of the few, who predicted that when the COVID crisis was starting over in Wuhan, China, I predicted that it was going to be a train wreck, and I came on my show and I showed pictures of a train wreck. And indeed, I predicted it was going to be a black swan and a train wreck, and indeed it was. It was very bad. You've all lived through it now, and you know what it was like. It was a train wreck. Guess what, guys? We got another train wreck coming. But I believe that on the other side of this train wreck, and I'm going to get into detail about what the train wreck is in a minute or two, and when, I got a much more detailed picture of when it's coming. This next train wreck, on the other side of it, we are going to have a period of, well, you guys been waiting for it for a long time, but a period of where things start to go back to normal somewhat. It's going to be a little bit of a good period. It's not going to last real long, but it's going to be a little bit of a good period, like a rest from what we've been through. We've been going through what's called a gauntlet. And it's been very difficult on all of us, but we're going to have a little rest from it, I think. Once we get through this next little period, and this next little period is going to be a train wreck. So we're going to have another train wreck, and I'm predicting that's coming. I'm not going to go into a lot of details or the factors that's going to cause this. Yes, this new variant is going to be among one of the factors that I'm perceiving that's going to cause it. Among one of the factors. There's other factors within the financial system itself right now that are setting up for this train wreck. And it's not going to be what you guys think. I know on YouTube here, there's a tremendous amount of people out there right now who are saying, oh, the stock market's going to crash by 80%, 90%. Some of them say it's going to go up by 30% and then drop by 80%. That's not what I'm talking about at all. What I'm talking about here with this train wreck is I'll give you guys a very specific timeline of when I'm kind of expecting it. And I'm going to give it about I feel pretty confident right now. I feel pretty confident about my prediction of this train wreck. And the timing. I feel fairly confident. In my mind, I feel about 90% confident. And that's a high rate of confidence for me. If you guys have been watching my show for a long time, it's a high rate of confidence, 90%. Okay, now the details, when I think it's going to happen. Okay? Early this year, coming. I think it's going to happen it's going to be at its worst in around probably February and March. And what it's going to look like? It's going to be amazingly high rising prices, a rising stock market, not a rising prices. This is going to be gold and silver. You've been waiting for it for a long time. This is going to be your gold and silver, this train wreck. I hear you guys out there saying, wow, why is that a train wreck? Our gold and silver is going to go way up in price. Yeah. But what's the world going to look like? The train wreck is what the world's going to look like. It's going to be a little bit of a rough period, a little bit of a rough go for all of us this spring. Early spring. I'm talking about really early spring. I'm talking about before the snow is actually melted off the ground, kind of early spring, But by spring, I think things are going to start to look a bit better. I don't think this is going to last real long. This is a very dark cloud that I see off on the horizon. Very black. It's the blackest cloud I've ever seen. I'm thinking it's got tornadoes in it. If this was a storm I was looking at. But it's not a storm. But it's like a storm coming. Okay, and that's why I'm calling it a train wreck. I know I'm not giving you guys a lot of details of what's going to cause it, but it's got to do with a lot to do with the financial system itself and the way reactions are coming from the people who are in charge. The system has weathered through this, let's call it a hurricane that's hit over the last, since we've moved into the 2020s. It's weathered through a lot. But now it's reached a point where in the financial system it's become unstable. There's instability within the financial system. And at this point, it wouldn't take an awful lot to push the financial system either toward deflation or toward inflation. But when there's a crisis, the government will err on the side of inflation. In other words, they'll print. Now, right now, what we've seen is massive supply side disruptions worldwide. So the system is fragile right now. It's not the right time for a crisis to come along that's going to affect or impact the world's supply side system. It's just as simple as that. And so, if supply side gets cut off, and then on the other side of that coin you get a great demand put on supply side, then prices inevitably go up, and they can go up massively fast. I'm not really, when I say this is going to be a train wreck, I'm not really talking about all in the financial system. I'm talking about a train wreck in the general system as well. The day-to-day system that we use for everything. When you go to the grocery store, and this is gonna be rough. It's coming in like a bolt of lightning. Over the next couple weeks, you're going to watch as this bolt of lightning or train wreck starts to unfold. Right now, it's time to prepare yourself. Prepare yourself mentally. Prepare yourself physically. Prepare yourself morally and ethically. How you treat your fellow man is very important. You want to treat your fellow man with respect and be a good moral citizen during this period that's coming. It's going to be I'm telling you guys, it's going to be a train wreck. It's coming directly ahead, early, very early in the year. Anyway, this is very sober. It's very sober what I'm saying. But a lot of it has to do with the variant and what the setup is within the financial system itself right now. The way the cards are laid out. In other words, if this was poker, and if this would be the royal flush. What's coming is the royal flush. And I've seen the cards. It's very serious. But it's going to have to play out. And I believe that it'll be almost fully played out at a certain point, probably by next summer. It's going to be fully played itself out. This is going to play itself out really fast. But we're going to feel the effects of inflation, but we're also going to feel the effects of probably massive stimulus measures. And so things are going to start to get back to normal, probably by summer. And it's going to be like, have you ever seen in the springtime when you got a farm, and the farmer, he's got all his cows, and they've been in the barn all winter, and they open up the doors and they let the cows out of the barn? That's what it's going to be like this summer for the people out there. They're going to feel like the cows that are being let out of the barn. after being through such a hard period for so long, such a desperate period for so long. I think that things are going to look an awful lot better by summer. I think this is going to be a quick thing that's going to be it's going to spread a lot of fear, but it's going to be the trigger for the hyperinflation. And so smart money out there right now is going to remember what Ray Dalio said. And you're going to remember it real well. I want you to listen very, very carefully, because Ray Dalio is correct. Cash is trash. But when he's mentioning cash, he's actually, he said that because it rhymes, you know. Cash is trash. But I want you to remember what he said. What he's actually referring to is not just cash, but also all of your fiat currencies. Cash is trash. I want you guys to remember that well. Okay, to lighten up a little bit, let's move in and get the chart started right here and take a look at what's going on. I don't know, honestly, if you could lighten up looking at these markets. Looking at this gold and silver price. It's down silver's down 5 cents again today. Honest to gosh, guys, I'm telling you. Can we ever pick up a break with silver? Boy, these manipulators, they've got this thing by such a tight hold on this thing. They are so powerful within this market, the silver riggers. I'll call them silver riggers, but really what they are is they're trading a derivatives product that has nothing to do with the real physical silver. It's a derivatives product. And by trading this derivatives product, they can hold the spot price of silver anywhere they want it to be. Anywhere they want it to be. And they have superior, powerful control over this. And so right now they've driven it down to a low of 22.32, which has nothing to do with the actual silver out there that you could buy. Okay, let's take a look at gold today and see what gold's doing. Gold's up 70 cents at 1769.60. This is like a coiled spring. This has been suppressed for so long. Downwards to the downside. And it's a real contrarian play. To buy real physical silver and gold right now is a contrarian play. It's a true contrarian move. The contrarian goes out there and he spots something that nobody else wants or loves, and the price is down rock bottom. Then the contrarian pounces in and he buys low. Buy low, sell high. The smart investor. Buy low, sell high. Okay, cryptocurrency today, 26.53. Now we're going to have to refresh the page to see which direction it's actually moving. 26.34. We're going to take a look at Bitcoin, and it's at 56,912. It's actually holding up rather well, considering that the tendency is right now, while the Fed is still talking about taper and stuff, or even a faster taper policy, the tendency is for things to go down. And we're in this little period, you know, where things are going down. Let's take a look now at the Dow Jones Industrial Average, which is up 76 points on the day, 34,698. Now we're going to take a look at crude oil, 68.93 today. It's up $1.89 today. We're seeing crude oils all over the place, up, down, up, down. It's like it's marching, marching to its own beat right now. It's 68.39 today. I want to remind you guys about crude real quick. You know, the United States, most of the crude industry is something called fracking, where they go down and they use high pressure and steam and stuff and everything to break the oil that used to be there. You know, when they first went out there, when Standard Oil first went out there and started digging their wells, you know, they would dig an oil well and they'd get what's called a gusher. The crude would spurt up into the air like 100 feet in the air, and everybody would be covered with crude oil. It was around the well casing. It was like raining down on the ground, right? And they pumped it out, and they pumped it out, and they pumped it out. All that oil that's down there under pressure. They didn't have to use any fracking. But what happened was, is after they pumped it all out and there's no pressure down there anymore, they capped the well off. Well, there was still oil down there, stuck to the stones and stuff, not under any pressure or anything. That's what fracking's all about, is getting that leftovers. It's basically like when you make a pudding, and you pour the pudding off, and there's a pan, and you give the pan to the kid to eat the pudding that's left on the stick that's stuck to the sides of the pan. Give him a spoon and give him the pudding to eat. That's what the fracking is. They're getting that last little bit that's left in the pan out. So it doesn't last as long. It doesn't have the staying power as the original wells when they first dug them, And that's what they mostly do over here in the United States now, is oil fracking. That's how they have to get it up out of the ground, Now in Saudi Arabia, they still have wells that are still able to produce oil without fracking, and there's that's a big oil reserve. We have another big oil reserve down in why is the name? I'm having a brain fart. The name of the country. They just experienced a hyperinflation. They got a big oil reserve anyway. Now we got a big oil reserve in Canada too, but it's sealed in sands. And it takes a lot of resources to get that oil out of the sands. But overall, if we take a look at the world picture of oil reserves left in the ground, I am going to tell you guys, I do not believe that it's a renewable resource. I know there's people out there that say the earth makes oil. I don't think so. I think their oil deposits are like any other deposit, like silver deposits, gold deposits. After you dig them all out, they're gone. Okay? What we started with before the Industrial Revolution was a very rich planet in resources. And what we've done is we've consumed a lot of these resources. We've consumed a lot of our resources, our natural resources. And the population has exploded through a credit binge that we've been on for like forever. Okay, there's going to be hard times coming because these resources that we've splurged on are not a lot. I think that the vast majority of them are not renewable. Now, lumber is a renewable resource. It is a renewable resource. But a lot of these resources are not renewable. Anyway, let's move on. Let's talk about something else here. Let's talk about the MOVE index today at 82.55. It's up 11%. No, it's up 11 points, I should say. 82.55. But it's not up to like it was. It was up to 90 there, almost 90. Take a look at bonds and rates. And we're seeing that the bond yields are moving up today a little bit. But we're looking at historically low bond yields. The 10-year at 1.45. And the U.S. 30-year at 1.78. U.S. 20 years at 1.859, which means that this inversion is actually growing a little bit larger. Let's take a look at the U.S. dollar index today. And what we're looking at is the dollar is dipsy-doodling around a little bit right now, but it's mostly going along sideways at 96.23. This has been your market report for today. Thank you guys for tuning in. And remember, trouble coming. Big trouble. Probably in February and March. That's probably about when we're going to be in the peak of it. And then I think things are going to start to calm down by like April or whatever. I think things are going to start to calm down, even get better in May and stuff. I think we're going to go through a little rough patch. I shouldn't say a little rough patch. I think it's going to be a big rough patch. You guys got to prepare yourselves. I know I'm not going into an awful lot of detail. That's because there's an awful lot of factors involved in this happening. It's each one of these factors are going to come together to make an overall picture of a rough time to deal with. It's going to last for a couple months, probably. You guys watch. It's coming. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the very next show. Bye-bye.